Good morning, everybody. It's Q&A day today on Day Trader Next Door. Today is Thursday before Good Friday. I did not trade yesterday because we had a significant weather event up here. We haven't had an ice storm like this since 1999. Now, for those of you who aren't familiar with an ice storm, essentially it's freezing rain, rain that falls and freezes immediately on contact. And the problem with that is, it makes everything slippery, but if you have a lot of trees, it coats all the branches and makes them much more heavy. On top of that, we had winds of 40 miles an hour yesterday, gusts. Not huge, but more than enough to do some serious damage. Now, of course, it's all melted now, but this is how much, there's no snow, this is all ice. That's how much was on top of the car, for instance, and that's a good 3/4 of an inch. Needless to say, that's more than enough to do some damage. And we've got our share of it here. That over there. And we had a pretty significant one break off and land right on the pool. Now, because the water's frozen, unfortunately, I think the pool is going to be salvageable, which means it's going to be even more work this year to keep it up, fix it, and then keep it up. But the kids will be happy anyway. And all the ice is now falling off of the trees. You can see it just coming down like rain. So that's good. But we heard stuff falling and breaking and creaking, a good part of the evening last night. Had a couple of them snap off back here too, landed in the garden. Now, even though we got dozens of trees on our property, I don't actually own a chainsaw yet. I keep saying I should get one, but the problem is I'm too cheap to buy a new one, and there hasn't been a good used one come up for sale here. But I fortunately found one last night that I'm going to pick up tomorrow. So I think I know what I'll be doing this weekend. Anyway, let's get to some questions and answers. All right, let's get to the questions. Now I realize the shirt change and all that. What actually happened is I went and got the chainsaw. It turned out to be broken. I fixed it and went ham on the tree, so made some progress. But anyway, I'm going to go through a handful of questions today. I'm going to try and do these more often, but let's get through 10 or so of them today and continue from there. Music Maker Com is wondering, how do you see the market orders in the DOM just waiting to be sold or bought, whatever? That depends on what software you're using. Well, hi. A co-host today. Anyway, that depends on what kind of software you're using. If you're using Sierra Chart, I believe it's a market depth window. You go up to chart and you go open market depth window, I believe it is, but there'll be one of those options in there, and it will open that up so you can see the ladder. I call it the ladder because it sort of looks like a ladder. If you're in Tradingview, it's kind of on the bottom right of your chart window, and there's like the watch list is over there. There's a bunch of other little things. You can just click it and it'll pop over. It's at like the bottom right for that. And then you can see all the waiting orders, keeping in mind that not all of those wind up getting filled. Sometimes they're sort of ghost orders that kind of make it appear as though there's a whole lot there, and they will be actual orders. But then sometimes what happens when it gets a couple ticks away, you just see those totally evaporate. So they don't mean everything, but they are something that I do look at sometimes, especially if it's far away and you see that there's a lot of orders on that one spot, say to sell, and you're going up towards it. That gives you an idea. You might want to get out a little bit before that because you might see a whack down after. Right underneath this comment, Simon says, has anyone ever referred to you as the Bob Ross of trading? That's a compliment, he says. Thanks a lot, Simon. Actually, that has happened before, and I'm contemplating getting a big wig. Not really, but yeah, that's a compliment. Thank you. Vinu Prasad, sorry if I didn't get that right, is asking, I mentioned about looking to the left of the chart for levels and that. How far back to the left should you look? Suppose you're looking at the 5-minute time frame. Is like the past hour okay, or is it something intuitive? Well, it's a bit of feel, of course, but whenever I'm looking at levels like that, I'm going to look back. Like it depends. When I'm plotting my levels that I email out to you guys and that I put on my chart, I'm looking back, a couple of months plus for those. But those are kind of zones of places where you can expect price to go. But when I'm looking at like just for the day, I'm looking at the hourly chart going back a couple of days, I'd say, to find those, and paying particular attention to previous days high, low, open and close. And I wouldn't plan those just from a 5-minute chart unless I really squished it down to tiny little bars. So probably over the last couple of days would be the easiest answer, simplest answer to that question for day trading purposes. Mark Tuck has a question. Do you always manually place your stops and take profit points? He's tried entering bracket orders with specific tick separations and trailing stop, etc. Results have been consistent. My thoughts. I have an automatic bracket order set that automatically gives me a 4-point target, 4-point stop, and I immediately adjust both of those as a rule. The only one I ever won't adjust sometimes is if the stop just happens to be in a good spot, but for the most part I'll adjust it out a little bit too. Never less than that though, as a rule. But that's just kind of a way that I automatically have a stop and a target in the market, bang, with one click, and then I can just drag it. It's easier than going and placing individual ones, and they don't always tie together right depending on the order you put them in. So I find that very handy. I do that, but I never trade just based upon that. Years ago, I did trade for a period of time, scalped with a 2-point target, 2-point stop, and I was able to make that work. But it was certainly, certainly very nerve-wracking and not something I'd recommend. But it was good training for picking really concise entries. But no, the stop and the target need to be adjusted to the structure on the chart. That's the way I look at it. But it's handy to have something that'll place them automatically so that you don't have to make more clicks and that you don't ever take a chance of just sort of holding on and not bothering with your stop because it goes against you right away. Kaiser has a question, and there's Lama had a very helpful reply, so thank you very much. Also, you guys, I see sometimes in the comments if it's a question that's asked a lot and one of you guys will chime in the reply. I appreciate that. Thank you. Speaking of which, I use a 4,000 tick chart on the ES. That question's asked all the time. And on the micro ES, I don't trade the micro ES, though I think I'm going to actually do that. Give that a try, at least maybe for a week or something, just to show you guys action right in the MES. I have looked at it, of course, and I do know that it behaves the same, but I don't trade it just strictly for commissions and liquidity. But the liquidity for trading 1, 2, 3, 4, 5, probably even 10 of those. You wouldn't trade 10, you'd trade one mini, but up to 10 of those, and certainly a couple, is excellent. And as such, the tick chart that I would say to use for that now is probably closer to a 3,000. A year and a half ago or so, when I started doing this, it was like doing these videos, it was more like a 2,000. But the volume is just coming up so quickly in the micros, which I think is great because it's getting more people out of the Forex and CFDs into actual futures still affordably. Because of that, the volume has really come up to not quite match the actual mini ES, but pretty close. So probably more like around a 3,000 tick chart. Anybody's welcome to chime in what they're using down there in the micro. And I still use a 4,000 in the mini. I like it. I've been using it for a few years now. I do have gone back and forth, up, down, 5,000, 4,000, 3,800, but I like the 4,000. So you're looking at my charts, every single one of my ES tick charts that I execute on has been a 4,000 since I started doing these videos. Anyway, Kaiser, to your question, great feedback by Lama. Essentially is asking, and this is something a lot of you guys might wonder, why is trading directly on Tradingview not viable? Well, it's not that it isn't viable, it's just not ideal. You can trade on it, especially if you're starting. There's nothing wrong with that. You shouldn't be trading real money at all until you're profitable in demo for a good couple of months. I mean, that's just a basic truth. I do advocate to getting into small amounts of real money, quickly, and by quickly it's relative. But I mean, like, don't go straight to a mini. But after you demo trade for a couple of months, if you get to a point where you're a couple of months profitable in the simulation of the micro, then trade one micro for a while with the same risk management rules and everything and see how it works, because there is an adjustment going from sim to live. And it may take a few times going back and forth, but once you make that transition from demo to live on the tiniest amount possible, as long as you go up slowly enough, you're probably going to be okay. But the thing with TradingView that I love the charts. It's just so nice to use. The thing I don't like is they don't have a real-time, I don't have a time and sales of any kind, and they don't have tick charts. I could live without the time and sales You shouldn't, though. You really should have time in sales, ideally, like when you're getting serious about this. I could live without that more than I could live without the tick chart because I've just really gotten to the point that I love tick charts. I've been trading with them for years, and I just like the way they condense the information, particularly um, in the busy market hours, and how they condense the overnight into nice, smooth levels that you can see. And he's got a Mac. Now, I do know of guys that use an emulator and run Sierra Chart on their Mac with good success. So that is a possibility. You may want to do that. If that works smoothly for you, I would rather do that than try and trade live on TradingView. Having said that, they are the nicest charts I have ever used. They're an essential part of my daily toolkit, and I would never want to be without them. I kind of look at it this way, like when you get to the point where you're getting serious about this, I don't mean serious about learning, but like serious, you're seeing some results and you're looking at putting this to work for you. Um, I think that at that point, most people would probably graduate to a physical platform for their execution, such as Sierra Chart or NinjaTrader or something like that. That's a small, very compact, low resource use program on your computer that just connects directly to the exchanges. You're not feeding your orders through HTML web pages and stuff. It's just direct. I think that's a common sense way to go. That program has never ever. It's going to bite me for saying this, but literally in years and years, it has never once crashed. It doesn't crash. Phil says, why does it seem to hurt more when a trade goes your way after you exit than if a trade instantly goes against you? Well, that's just the fact that you missed out on it, right? But one thing I would like to maybe just comment on that is the further you go in this, the more it doesn't bother you as much. For me, I would much rather see a trade go on without me. It happens all the time. Um, that's fine. What you really don't want is when it goes against you right away, especially if it goes into your stop. I would much rather, and you get used to it over time, just watching it go on without you, than to say, "Oh, I could have caught all that." Well, maybe not. Maybe it would have come back, and you would have got out at the same spot anyway, and then it went up. You're never going to catch the whole move. The whole idea of the way I trade is just to try and catch a small piece of it consistently and get your money out of the market, get your risk out of the market, and come back another day. Big neck energy is a question: how do you pay yourself as a trader? And now that's different for different traders. Most people, I don't say most, but a lot of traders who are full-time traders, such as myself, my I'm an employee of my trading company, right? So owner slash employee. So the trading company makes a withdrawal, which I do, but makes a withdrawal from my trading account once a month. I only ever do it once a month. Sometimes it's every couple of months, no more than once a month, just because the wire fee. But you make a withdrawal that goes into the business account, and then I pay myself a dividend essentially out of that account whenever I want to, usually monthly, sometimes bi-monthly, something like that. That's up to my discretion as it's a dividend. Now, if you're trading as an individual, which you'd be doing for the first while until it makes economic sense to incorporate, it would be the same thing, except it would just come into your account. Money would go from your personal account wired to the broker. If you make money, money comes from your personal brokerage account back to your personal bank account, and then you're responsible for paying the taxes on it. That's the one thing, and you have to figure that out. And realistically, if you're a trader, it's a good idea to have an accountant do it for you, because it's different everywhere. I'm certainly not going to give tax advice to anybody because it's not the same up here as is in the U.S. Now, the U.S. has much nicer treatment for futures traders, or short-term capital gains, which is great. And we don't have that same thing here. So anything that the trading company makes is just like regular business income. So that's a bit of a drag, but I mean, it's no worse than running any other kind of business. You just don't get any special advantages like you do in the U.S. Uh, so anyway, that's kind of a brief idea of how it works. Essentially, you're responsible for your own taxes, and you're responsible to transfer money to your broker to trade and to make the withdrawal of it back to your account. The only drag for Canadians like us is we've got to pay wire fees because there's no other way to transfer back and forth. If you're in the U.S., you can do an interbank transfer, an ACH or whatever it's called, most likely for free both ways. Okay, this is a good question that I think I've probably addressed before, but warrants a little bit of explanation. Rhombus Work Money says, I think this was on my day in the life one. I don't get why you need 25K or more to trade like this. 2 point stop loss, 5 contracts is $500. Why do you need to have 25,000 to trade like this? Wouldn't 10x or 5,000 be enough? Well, you should have more than 25,000 to trade 5 contracts to ES, pretty much regardless what your stop loss is. Ideally, it would be 50, but I mean 25 once you're confident. And the reason is, a lot of you guys may know this already, but yes, if I had 5,000, it would be enough to take that trade. Yes, but the problem is I'd be risking 10% of my account on that trade, and that's not sustainable. You need to keep your risk small enough so that if you do get a string of losses, it's not going to blow you up and wreck your emotional control and your psychological capital at the same time. So yes, it would be enough to place that trade. To place that trade, I only need $2,500 to actually place the trade because it's $500 of contract margin. But it's just way too close to the wire, is what I'm saying. But really, you should have 50,000 to trade five. You should have 10,000 per contract that you're trading. Ideally, that's and I mean I do have that. I just don't keep it in my account. That's the thing. You don't need to keep it all on your account, but you need to have that money as trading capital sitting on the sidelines. The whole idea is you want to keep your position size small enough that no individual loss or no max daily loss or even any max monthly loss is going to wipe out your account. And on top of that, like, it's very rare now that you have a 2 point stop loss on the ES. When I first started doing these videos, I was able to get away with a 2.5 point or so stop on a lot of my trades. Not now. It has to be wider because the market is twitchier and it's wicking more. So you have to adjust that a little bit according to market conditions. So right now, you need to probably, to trade the way I do, I kind of count on a 5 point stop loss all the time. Not exactly. So it might be 4 and 4.5. It might be 6, 6.5. But that's kind of what you need to get your stop loss above the noise level of the market right now. Ryan SM has a question I have addressed before, but there's been a number of people ask it, so I'm going to mention it again. It's buried in some other Q&A video talking about scaling out. I'll just give a short answer to this. I don't scale out ever. I used to. And when I was swing trading, I used to scale out a lot. I don't do it for pretty much one simple reason. My core competency in this whole trading endeavor is to be able to get consistent points out of a market each day, or certainly each week, most of the time each day. Like if I lose the first one, I can probably get past break even, and I most likely will quit then so that I don't have to bank a losing day. Now, that what I'm saying is I can capture positive movement in the market. Okay, I can get positive points. That doesn't help you as much if your winners are a different position size than your losers. When you scale out, all of your losses are going to be on the full position, just the way it works. If you use a trailer, your wins were going to be on smaller position sizes. Now, in the end, it may work out better, it may work out worse, but the net effect of the ability to capture positive points is not the same. I want my wins to be on the same position size as my losses because I know that I can capture positive movement in the market. And if I get the odd, if I catch the odd runner, and then that was nice back in the day when you caught one, but it really sucked whenever you were getting out at your first target and then the other positions were punching out at break even, yet all your losses were on the full contract size. So that's the way I look at that. AJB, another question about being a Canadian trying to trade futures. Now, it is totally doable as a Canadian. It's I wouldn't call it totally easy, but it's not difficult either. And he's just talking about how do you get your money back and forth. I sort of mentioned that, but I will mention this one thing. He said it shows that he could integrate his bank account and do that. Well, I saw that too. one time when I went on. And I tried, it was with Stripe or something, and I tried it like 10 times and it always stalled. So I don't think you can add a Canadian bank account integration to them. So you're still going to have to do the wire transfer, which unfortunately is $30 for them to send a wire back to you, and for the most part on your bank is going to be another probably $25 Canadian charge on top of that. So it costs you about $60 Canadian to get your money out. But if that's something, once you're consistent and you're doing this as an income, and you have to pay that once a month, well, that's not a big deal, and you can write that off as a bank fee. Kin 1972. Another question about sort of brokerages and all that stuff. How much does it cost to get started and set up to trade futures? Excellent question, and it's certainly variable. I'll probably do a separate video on this at some point. Short answer: you don't want to do that until you practice first, and you can learn and practice for absolutely free. And I'll link up here the video of how to do that, and I think is the most economical and most realistic, useful way to do that. Now, if you're going to start trading live, you're going to have some fixed monthly costs. And that's primarily the one that you simply can't get away from no matter what way you do this is the data. And if you want to have real-time data, which you need to trade live, and you want to have level 2, which you should have to trade live, that gives you the depth of market. And you can see the orders on the ladder. It gives you time and sales data, all that stuff nicely processed for you. It's around $30 a month, $35 a month, and that gets you what's called the CME bundle, which is all the Chicago Mercantile Exchange bundles. So the Board of Trade and the CME, and you get all the stock indexes that way. You get the financials, the bonds, you get I believe you get the energies and metals. Now, if you just want to get data for the indexes, minus the Dow, that is, you can pay much, significantly less. I guess maybe $10 a month for just that. But the bundle is what I've always gotten, and I think it's really not too bad. And with that, that's all you need. You can trade, say, on TradingView or on another no-fee platform of any kind for just that, and that's all that you'd have to pay for monthly recurring costs. Now you do pay commission, but that only happens whenever you make a trade. At least with a discount broker, there's no monthly service fee or inactivity fee. You just pay when you trade, and that comes directly off of your statement for the day. So depending on your data feed, Sierra Chart can be free if it's they have an arrangement with your broker and their broker supports their own Teton or Teton feed. If they don't, it might cost you somewhere around $30 a month to use it. There are other options too. There's NinjaTrader that offers a one-time lifetime license. I think at least they always used to, about $1,000, and you own the platform and updates forever. So there's different ways to do it, but you can get started just trading on TradingView for strictly just your data fees, and depending on your broker, I believe Ironbeam does support the Teton feed. They're an excellent broker that works for Canadians and Americans, and they're also a clearing member. And I believe you would just have to pay the data fee, and I don't think there's an additional charge for Sierra. So short answer, between $30 and $50 a month for a good amount of data and a proper trading platform monthly fees. And one more thing, Shay makes a comment here a few weeks ago talking about he started paper trading and almost blew his account up on this one particular day that I think was kind of a twitchy day. Uh, so just trying to make sense of what was happening. Glad to hear it wasn't 100% my mistake. And then Reese comes in and very, very, very aptly points out, yes, it is 100% your mistake for taking those trades. Now, and of course, and Shay comes back and says, appreciate the tough love, essentially. I'll just make a little comment on that. First of all, Reese, great comments as always, and Shay, the thing is, what's great is you're doing this in demo, so that's the time to learn this lesson. Now, honestly, I'm almost to the point where I think that everybody almost needs to learn this in live again. Unfortunately, they don't have to, but most of the time it works out that way. So what we want to do is avoid that. So you had those experiences in demo, And that comes from just clicking the button, going click, 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 click. And then you look back at it later and you see what a train wreck it was, and you think, why did I do that? Why could I not see that? That's whenever I see people's charts where they've got like, you know, trade, exit, trade, exit, trade, exit, trade, exit, and the same candle they enter it again. You know, it's that rapid fire. That's just completely throwing your money out the window. That's one of the reasons I advocate for at least a 5 minute break between trades to kind of get your head back on straight. That's not always enough, and maybe you're done for the day as far as mental capital goes. But it's super important to have those blowout days when you're trading demo and get to the point where you can completely avoid them. No matter what I say or what anybody else says, that's another reason why I just am totally against live trade rooms and signal services. Is no matter what I do or what somebody else does or what somebody tells you to buy or sell when and where, they might be right, they might be wrong, but you're the one that pushes the button, and the trade is always 100% on you. And the thing is, that's not a way for the other person to skirt responsibility for telling you to trade or sending you a signal or something. It's all about you taking responsibility for your own trades. And the thing with that is the only way you develop any real confidence in this is to take responsibility for your own trades through practice, through making them over and over again, and having these blowout days, hopefully in demo, and then having the successful days, and looking back on it and seeing where you went wrong and where you mentally fell apart and started to destroy your account. You need to take responsibility for 100% of those trades because you're the one pushing the button. You're not connected to a trade copying service, which is also a terrible idea. But whether you take it, no matter who told you to take it or not, you're the one that took it. You have to accept 100% responsibility. And when you get to the point you can do that, you have to be able to do that if you're ever going to be successful long term in this. There's no other way around it. And through taking that responsibility comes confidence. So keep at it, Shay. Thanks for your comment. Thanks for yours too, Reese. And I think with that, I'm going to call it a day for today. It's already been a long enough video, I'm sure. But keep your questions and comments coming. I will be doing more of these. I'm going to try and do it more often. Grab my cheat sheet newsletter, daytradernextdoor.com. As always, thank you so much for watching. I hope all of you who celebrate have a fantastic Easter weekend, and I'll see you again soon.